a phenomenal rally that played out yesterday. You could say that it was pretty much on expected lines with respect to the election verdict having fueled that momentum on D Street. But you did see it play out, and how the fact that it was a 900-point notch up on the Sensex. You had the Nifty, which scaled to 24,200 plus levels. It was a gain of 300 points almost, and it was sectors across the board that participated. In fact, you did see the PSUs that really had a terrific run. The Nifty PSU Bank Index was the top gainer. It gained close to 400 points, I think, at the start of the trading day, and then went on to sustain close to those levels. You had the Nifty Bank as well that saw a stellar 1,000-point rally, and that really supported the markets all in all. All of your sectoral indices ended in the green, and just yesterday's move has really helped the overall momentum. The fact that we were in consolidation mode for quite some time, you did see a synchronized rally play out. A lot of those large caps shone in trade. I think HDFC Bank was at a life high at some point. Within the broader markets as well, the momentum within the entire PSU basket was very evident. And from those October lows, we have moved quite significantly. So now, Nikunj, the question is, yes, we've seen all of that play out. We've got a pretty healthy handover from Wall Street, which we'll delve into later. But will the rally sustain?
So, Awan, it's not just yesterday's rally. It was Friday's move also. And from there, you have to really account from Thursday's low. Where are we in terms of the Monday's high? And it's been a good comeback, guys. I think it's been a very good comeback. It's been a comeback where markets were oversold. And that edginess in the market surely seems to have faded away. So everybody knew that markets are oversold. Nobody knew that what really could be the trigger point for the bounce. And the trigger point coincided with short covering and the outcome on the election front. I expect December to be better than November. And I expect that in the month of December, the last hurrah is still left. October, November was all about news flow, plenty of news flow, global news flow, local news flow, elections, earnings, festival season, earnings downgrade, Trump rally, China comeback. In December, all those factors may not be at play. Markets are not extremely frothy. Small and mid-cap stocks have seen a decent correction. We've seen what could be called as the excesses in the market which have been flushed out. So my view is that in the month of December, the bias would be positive. The declines would be shallow. Unlike what we saw in the month of November, where markets were falling because of local factors, because of FI selling, I think that will start getting arrested. You could see a trade which is US markets, like I've been maintaining, the pace of rally or pace of appreciation is stalling, and the pace of underperformance by India seems to be getting arrested. So I'll stick my neck out and say that I think the best of the market is yet to come. This rally may not be a straight line rally, but I expect that the market mood in the month of December should be buy the market on every decline, and rather than selling the market on every uptick. Strength could surprise us. That's largely because we are hitting a patch of news vacuum, which means technicals, valuations, they would be at play. And looking at the flow picture also, the flow picture is not terrible or horrible. It is something 3,000-4,000 crores, something markets can well digest now.
Okay, there you have it. That's how the trade setup is and what the outlook is on whether or not this rally is likely to sustain. But yes, it was an action-packed session that we saw on Wall Street. In fact, lots of announcements, tariffs on Chinese goods, etc. by the president-elect Donald Trump. And you did see the Dow pop nearly 1% or so. It was a new record close during the regular trading. The S&P 500 comfortably in the green. It was a new all-time intraday high, and the Nasdaq as well edged up, while the Russell 2000, by the way, hit a new intraday high, the first that we've seen since 2021. Treasury yields, though, have seemed to have fallen. A lot of investors have been looking at, some of the aggressive trade aspirations as a bit of a concern coming in. You have oil prices declining about 2% or so. And despite what we saw play out on Wall Street, you had the Asian markets taking a completely different direction. It was failing to really track those gains that we've witnessed on Wall Street. And you had, for the most part, the Asian markets cracking about 0.5% to even 1.5% or a flatline trade for the Hong Kong markets. So, Nikunj, just going by the kind of trade setup that we have across the globe, 25% tariff on Mexico and Canada that Trump has vowed for, and then you've got the FOMC meet, the GDP print as well coming in across the globe. What's the sense that you're getting from the global setup?
See, I was going through what news came out overnight in terms of the tariff. 25%, 10% tariff on China, 25% on Canada and Mexico. Until and unless I've missed it, there's no mention of India, right? We've not missed it.
No, it's just Mexico, Canada and China.
So what should be the reaction?
Yeah.
If you're talking about increased tariff in Mexico, high tariffs in China and Canada, which has been the long-term trading partner for United States, if they're looking at increasing tariffs there, that technically means that the tariff war would be limited and restricted to these three large countries, and it is unlikely to have an impact in terms of what India would fear. So this whole China plus one narrative, and I'm surprised nobody's written about it in the morning in terms of a brokerage meet. I think that is something which incrementally, see, to say that no tariffs will come on India, I think is impossible. But to make a case that India would attract less tariffs, I think looks like a possibility. Now, if India will attract less tariff, which means this China plus one, which is a post-COVID trade, will only extend itself, and companies which are in manufacturing, which are in exports, which would benefit because of the China plus one trade, I think are the ones where you will see some amount of outperformance in the near term. The fact that tariffs are coming, everybody knew about it. The fact that Donald Trump had indicated that if you vote him back to power, he's going to be increasing tariffs to protect American industries, everybody knew it. So in terms of a communication, even before he's taken over as the United States president, right now he's president-elect, he's explicitly made it clear the kind of policy the Republican regime is likely to follow. But for me, what really means, for me, if I read in between lines, is that there is no mention of India, prominent mention of India, let me put it this way. And if that is the communication, and if one works with an assumption that the idea really is to go first against China, Canada and Mexico, that means on the margin, India would benefit, and that is something which markets will slowly start recognizing it. Now the point is that is the genie out of the bag, which is that which way tariffs would move, which way the dollar policy would move, which way the manufacturing policy would move. I would say yes. So you pretty much know that what you have to deal with or what kind of regime we are in when it comes to Donald Trump and when it comes to the new Republican administration.
Okay, fair enough. That's the view coming in when it comes to the entire global setup. I guess for India, nothing has been declared just as yet. But let's talk about the PSU basket, because they sure were on fire in yesterday's trade. The entire space was seeing momentum, and it's interesting because this big win for BJP in Maharashtra spells out a lot according to brokerages for the entire space. You can see it on your screen. The government's order backlog will be clear. They're talking about now parliament sessions focusing on shipping and exports, the fact that execution will be the focal point instead of stimulus. Capex is likely to rise in the second half. A 52% expectation is what brokerages are penciling in. And there's a lot in store for the entire PSU basket on the back of this BJP win. Yes, risks remain with respect to inflation and geopolitical tensions, but just going by the kind of move as well that we've seen in the PSU space, the fact that there's been this renewed rally, the 12-month potential as well is in double digits of 24 to 34% according to analysts. Nikunj, it seems like the space is ripe for a turnaround.
See, turn is a very strong statement. Avan, these stocks were almost like Humpty Dumpty. And from those Humpty Dumpty levels, these stocks have just lost some fat. So PSU stocks had just become disproportionately big, and there was just no cognizance of what the margin and what the growth was. So the fall was overdue. That also coincided with a slack in government spending. Now we have to look at the fact that where the government spending in terms of an multiplier would be the highest. And I expect the disproportionate beneficiary here would be power. The disproportionate beneficiary here would be alternate energy. The disproportionate benefit here would be anything which has got to do with this entire energy transition theme. So I think that in a sense will become a very large theme where you will actually see outperformance. Second, PSU banks. I think the sentiment for PSU banks has been unnecessarily sad, and I'll stick my neck out here when I'm very confident I do that, which is we've not had any large disappointment in terms of earnings from PSU banks. They were marred because other PSUs were getting slammed. The growth is still intact and balance sheet issues are not there, which means NPAs. So I expect that PSU banks will lead the front. Power could be the second one. I don't expect any renewed vigor coming back in railways and defense that prominently because valuations are still looking very stretched, and frankly a lot of government spending which was going in some of these sectors, even if it normalizes defense and PSU stocks, defense and railways I think are very expensive. So for me the whole PSU or the Modi trade now would be centered around large PSU banks followed by energy transition and power stocks. That's how I see the differentiation in terms of the first half of 2024 versus second half of 2024 for PSUs.
If you like this video, then like, share and subscribe to ET Now.